Today on Fear and Greed, the Aussie dollar hits its lowest level since the pandemic. Economists think that weaker than expected inflation might mean an interest rate cut next month. And opposition leader Peter Dutton hits the new year in full campaign mode. Plus, the local share market makes solid gains. Star Entertainment sits on the brink of administration. And Meta ends its fact-checking operations as it looks to get closer to Donald Trump. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 13th of January 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, we're back with our regular programs, although the morning shows this week will be a touch abbreviated, just a little bit shorter than normal, but back to full length, everything normal next week. Full shows, daily interviews, afternoon editions, Ask Fear and Greed, plenty more. There is an interview still as well this week, so there's still plenty of good listening. There's no shortage of good Fear and Greed.
Yeah, and look, neither of us have really been working full time over the last 3 or 4 weeks. Now we're back. So much has happened in the past 4 weeks, and it's not just Donald Trump and Elon Musk. So much other stuff going on in markets, in the economy, in politics here locally. It's just a good time to be back, Michael.
Yeah, it certainly is. I'm genuinely excited about it, Sean. The main story this morning, the Aussie dollar has hit its lowest level since the COVID-19 pandemic, heading towards 61 US cents. This is extraordinary.
Ouch. 61.38 cents on Friday. Now, September last year, it was more than 69 cents. We're back down towards 61 cents, US cents. Now, against the euro and the yen, it's off as well. Not quite as much, certainly not as much as the US dollar. A lot of that is about the strength of the US dollar. What is a really good measure is the trade-weighted index. It actually measures the Australian currency against all our trading partners. We fell below 60 on the TWI basis on Friday. That's been happening on and off for the last 2 or 3 weeks. Only 2 times in the last 20 years have we regularly been below 60 in terms of TWI. One was COVID, one was a global financial crisis. This ain't good. Not good for holidaymakers, clearly, especially if you're going to the US. Bad news there, Michael. The main reason for this is the benign inflation figures that we got last week. We'll talk more about that in a moment. Also, the outlook for commodities ain't that good. The Aussie dollar is a commodity currency, so if commodities do well, if coal prices, iron ore prices, gold prices go up, then the Aussie dollar tends to follow it. That's not happening at the moment. Is this good or bad? It's actually good for the economy. Imports become more expensive, so people buy local stuff. Our exports become cheaper. It's actually a boost for economic growth. So if you're having a holiday, not so good, but in terms of the economy, not so bad.
Sean, I love the fact that you asked yourself whether it's good or bad. It feels as though our first kind of proper show back for the year, and you're trying to prove that I'm not really needed anymore.
Well, no, I was hoping that you'd jump in. So is it good or bad?
I'm just listening. I've forgotten how to talk to you, and I've just become a listener now. Over the last few weeks, I've been listening to the interviews that you've been doing. Anyway, I will pick up on one thing that you said about the boost for economic growth. That boost could well work against the Reserve Bank of Australia cutting interest rates anytime soon, couldn't it?
Yes, there's plenty going on. So the main influences on interest rates at the moment, inflation remains number one. Last week, the Australian Bureau of Statistics monthly CPI, Consumer Price Index number came out, came in at 2.3%. Obviously, we're within that 2 to 3% Reserve Bank target range, but we know from last year that headline rate, that 2.3% headline rate is all about energy rebates. You've got to look at the underlying rate. That came in at 3.2% in November, down from 3.5% in October. Only a partial series, it tells part of the story only, but Michael, in this case, the trend is our friend. Inflation is heading in the right direction. So that suggests that maybe the Reserve Bank will shift on rates. The weaker Aussie dollar will give the Reserve Bank pause for thought, though. It actually acts as a stimulator to the economy. That's a good thing, but the Reserve Bank needs to take that into account when it's thinking about inflation. ANZ Chief Economist last week, Macquarie's Chief Economist last week, both came out and said, we think that interest rates might actually fall next month, February, next month, not March, not April, February. There could be a rate cut. Bond markets have priced in a 72% chance of a rate cut next month. It is a live option.
Do you remember a time when there's been so much uncertainty over interest rates? Because we have had now, over say the last year, so many predictions as to when rates were going to come down. And it seems that every single economist at every single bank has had to reassess their forecasts every single time another piece of data comes out.
Yeah, I mean, I think it's actually longer than that. It's ever since COVID, because remember, we were wondering when rates were going to go up. So, they're going to go up, and they didn't. And then suddenly they shot up.
Yeah.
And what it is, ever since the GFC, there's been a really abnormal period of monetary policy. Rates have been low. Since then, we're back to the new normal, which is the pre-2007 period. And it's a guessing game again.
So do you think economists then have a harder job now than they did, say, 15 years ago, 20 years ago?
I think it's about the same as 20 years ago, but harder than 10 years ago. So the post-GFC, 2007 to 2021, that was the easy time.
Okay. All right. Now, Sean, we are going to take a very quick break. We have a lot still to discuss. We're talking Peter Dutton's vision for Australia. We're talking about Facebook and Donald Trump. So much still to come. We'll be back in a moment with the rest of the day's business news. Sean, opposition leader Peter Dutton has outlined his vision for Australia in a major speech yesterday, saying he will focus on tax, migration and education.
Sounds like there's an election around the corner.
It does just have that ring to it, doesn't it? I mean, these are the big issues, aren't they?
Yeah, well, he was speaking in Melbourne. He said things like it's a last chance to reverse the economy and the social decline of Australia. He said Australia may never recover if Anthony Albanese is re-elected. A sliding doors moment, another favourite of mine. He talked about the views, values and visions of everyday Australians. He talked about Anthony Albanese being the weakest ever Prime Minister. Very heavy on vision. Talked about small government, using business to drive growth, lower and simpler taxes, families, the mainstay of society, a late nation within its means. Nothing on policy. I mean, tax, migration and education, yeah. But don't try and dig deeper into yesterday's speech because there's nothing on those policies as such. It was significant that it was in Melbourne because the coalition hasn't done well. I mean, at this current parliament, there are 39 seats in Victoria. It has just 11. Mostly Labor has them. The Greens has, and the Teals also have some. The opposition hopes to win seats like Chisholm, Aston, Goldstein, McEwen, sort of Melbourne seats. They're really hoping for that. And so the fact that yesterday he came and more or less launched the year in Melbourne is very significant, and he's on campaign footing, and I'm sure Anthony Albanese is as well.
So did he actually refer to it as a sliding doors moment?
Yeah.
You've got to love that because that term did actually come from the movie. Like it wasn't something that was around before that. The Gwyneth Paltrow movie actually defined that. Now you've got kind of would-be prime ministers quoting it as though it is just a term that is just entirely entered the everyday vernacular.
Yeah. Totally. And
I love it.
I never liked that movie.
Yeah, but you're a terrible judge of films because you haven't seen any.
Yeah.
I'm amazed that you've seen Sliding Doors, to be honest.
Reruns. I actually saw Gladiator 2 over the break.
Oh, yeah.
Well, and that's not even true. I saw about 45 minutes of it, but it just wasn't holding my attention.
Oh, my God. God, we've got a lot to cover this year, Sean. Let's talk about the share market, shall we?
Yes.
The local market, you've got to say, started 2025 reasonably well, although it's quite away from the highs of early December last year.
Yes. So let's say it almost hit 8,500 early in December last year, 6 weeks ago. It fell to below 8,100 just before Christmas. It's now around 8,300, so halfway between that point. So I suppose, the first couple of weeks, it's been okay. It's up about a little over 1%. So far this year, the real estate investment trust, the property companies have done best, and that's on this interest rate speculation. Energy companies have done pretty well too. That's because prices are a bit better. Then the financials and healthcare, think of the big banks there, they've actually done pretty well so far this year too. Now, that's on the back of expectations of lower interest rates. Financials and healthcare get hit by that. Those two sectors were big winners last year. You can't really expect them to repeat that this year, but they've started off pretty well. Worst have been utilities and staples, consumer staples. So I think Woolies, Coles. They're not cyclical. They just putter along the whole time. So they tend to underperform when interest rates start falling. Very, very difficult to have much confidence about 2025. If you read through the investment analysts, and most of them think that it'll be a positive year. But Donald Trump, tariffs, what's all that mean for China, global trade, Australia, how they interact in that global trade, and tax wars. Donald Trump's talking about this big cut in corporate tax rates that could trigger other economies to do it. Very, very difficult to know exactly what's going to happen.
Sean, one story, really, one corporate story that was a standout in 2024 and also in 2023, because this keeps on going, has been the underperformance and the dismal performance of Star Entertainment. And that continues now into 2025.
Yeah, on Friday it said it has $79 million in the bank. You might think that's a lot of money. It spent $107 million in the last 3 months. Gamblers are staying away. Turnover's not good. Expenses continue to grow, including fines for their different license breaches. They're still facing an AUSTRAC fine that could be up to $300 million. That'll wipe out that $79 million really, really quickly. The New South Wales and Queensland government are refusing to bail out the company. The Queensland Premier made that very clear on Friday. David Crisafulli said he won't bail out Star, but he might negotiate with any new owner if necessary. That's not really a big sign. That's not a sign of confidence. No. When the Premier of the state says, we're not going to help them, but we will negotiate with any new owner.
Oh, God. It's just like, okay, all right. They're just waiting for you to fail.
Yeah, it is. Analysts now think there's about a 50-50 chance that Star won't make it. It'll fall into administration.
Oh, wow.
Now, it could. There's still got options. It's got a 50% stake in Queen's Wharf in Brizzy. That could be sold. That would be worth a lot of money. On Friday, its share price fell 15%. It's now trading, Michael, at 11 cents a share. Over the break, I didn't take much notice of share prices. 11 cents a share. 6 weeks ago, or 6 months ago, it was about 5 times that level. But 6 weeks ago, it was double that level. It's now 11 cents a share. Amazing.
That's dismal. All right. We talked local markets. What's happening on Wall Street?
Okay, so current expectations are for just one rate cut in the US this year. About 2 months ago, we thought there'd be 4 rate cuts. Before Christmas, it was 2 rate cuts. Now it's down to 1. Part of that is because the economy is doing pretty well. Over the weekend, strong employment figures came out. It adds to the fewer rate cut arguments. Wall Street fell sharply. It's around 1.5% lower over the weekend. That's where it is for the 2025 year to date. Chinese share market's kind of interesting. Worst start to the new year since 2016, down 5%. That is on the back of the Donald Trump ambiguity, for want of a better word. So plenty going on in China particularly, but also on Wall Street. And markets, until Donald Trump takes over, and it's a week away today, I think, he actually, he says he's going to make changes immediately. And on that day one, he could come out and place tariffs and all sorts of things on. So a lot of uncertainty around the place.
Sean, it's a good time to mention the interview that we have today. That is with William Liu, who is from WAM Global, Wilson Asset Management Global. And he is talking about 6 overseas stocks that you may not have considered.
Yes. Now, a couple of those stocks you know the names of. A couple of them I had no idea on. And William is based in New York, knows plenty about what to buy and sell, not just in US markets, but European markets as well. So if you're an investor interested in investing, it is well worth a listen.
Yeah, sure is. Now, you mentioned Donald Trump. His influence, Sean, is cutting a swathe through many companies, including Meta, the owner of Facebook.
I think this is quite a remarkable story in that it shows how corporate US is responding to Donald Trump. Mark Zuckerberg has announced a free speech overhaul. Meta will now can Facebook's fact-checking program. Instead, they're going to rely on community to flag misinformation. That's exactly what X does. So we don't need fact-checking. If it's wrong, someone will tell us, that type of thing. Meta's also going to weaken its hate speech policies. It's replaced its global policy chief, Nick Clegg, with a prominent Republican, an ally of Donald Trump, a guy called Joel Kaplan. It's appointed Dana White to the board. Now, Dana White is CEO of the UFC, big-time Trump confidant. Over the weekend, it dumped its diversity, equity, and inclusion efforts, and it actually came out and said they're going to dump it. Zuckerberg appeared on Joe Rogan's podcast. He said corporates had become culturally neutered. They needed more masculine energy, and we need to celebrate aggression a bit more. Wow. I just think, I don't know what to say about that. I think it speaks for itself.
Oh, that's quite extraordinary. One last one, Sean, because this has been the big story that everyone's been focusing on over the last few days. The pictures have been shocking. The 4 wildfires around Los Angeles continue to rage.
Yeah, they do. I mean, a dozen people are still missing. 16 people have been killed so far. The largest fire in the Palisades is spreading east, now threatens the wealthy neighbourhood of Brentwood. Unfortunately, gusty winds are back. They're forecast for the next few days as well. That's not going to help anyone.
Goodness me. All right, Sean, that's the end of our first full show for the year. Big year ahead, right?
Very big year ahead. Very exciting.
And also, a quick mention of the summer series that we have had. If you have not had a listen, there is so much there to go back through. And we talked about the interview with William Liu that's being published today. There are so many other ones along those lines with a whole bunch of investors and analysts, people who know a whole bunch of different sectors here and overseas, looking at a whole bunch of different companies, a lot of good ideas for investors, just places to start your research and just to factor maybe into your considerations.
Yeah, definitely.
All right, Sean, thank you very much.
Thanks, Michael.
It is Monday, the 13th of January, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.